Let's stock sectors. So I'm going to do cyclicals. Now, in the US, cyclicals, materials down 1.3, industrials down 1.6, consumer discretionary down 1.3, financials flat, and IT down 2%. Now, it's actually been a fairly broad-based sell-off in the cyclicals in the United States. So within the sectors, there hasn't been many major stories, but that down 2% move in IT doesn't actually tell the whole story about what's happened in that sector in the last week. So what actually drove that sector down was Hewlett Packard. So HP had a warning for 2011, net profit warning. Stock's fallen 10% since it was down 8% on the day, and it went down another 4% the following day, and it's bounced a little bit.
Interesting observation there. Salesforce, given the same time, which has got that on-demand model, blew the doors off their numbers.
Oh, really?
In essence. So,
okay.
Yeah.
Well, basically, the two bellwethers, so HP down 10%, and Dell guided up the same day. And the mix in the earnings of these companies relative to each other is basically HP, the consumer side, just got murdered. So no one's buying PCs, and it's the desktop to tablet switch. Okay. And Dell consumer side got murdered as well. But guess what? They've made acquisitions and they've switched into business software
but it's
and hardware.
Yeah. It's a main industry supplier.
Yeah, but that's what saved them. So we're getting this dichotomy. Dell. What's interesting about Dell's numbers is they confirm what the macro leading indicators are telling us, which is consumer confidence remains weak, fairly weak, and business confidence remains really high. And at some point, one of them's got to give. Either consumers have got to become more bullish, or businesses have to become less bullish.
So we present the view of the industry and the retail client.
But Dell was up 5% after guiding up, and it's all really the cloud switch. This trade that Bruce brought up 3 months ago. So when we talked last week about European software making the cloud switch, autonomy, SAP, and hedging them with Dell and HP, the autonomy Dell spread trade is still making money. So it was amazing. Over 2 days, so the day that Dell reported, and they were up 6% on the day. Autonomy was up 4% on that day as well. And the following day, Dell was down 2% when autonomy was flat. And it's amazing, like that trade, autonomy versus Dell, behaves like a dream. Because you can have the greatest thing in the world on the short side of that trade, which is that the stock that you're short has actually guided up profit for the year, and you're actually still making money on the spread. It's insane. To have that trade on and you still make money after a headline like that is crazy. It just means you've got absolutely the right trade on. So, autonomy, long, SAP, long, Dell and Hewlett on the short side. But be careful if you're putting those trades on. Be careful, because Hewlett is looking very massively technically oversold. So you might want to leg the spreads. So leg your way into the spreads. Wait for a technical bounce in Hewlett. Europe, autos and parts down 2.7. Banks down 1.27. Mining down 1%. Industrial metals down 2.8. Let's start with autos and parts. Seen a lot of profit taking in Germany. So that's why the DAX has been a bit heavy. So you've seen quite a bit of profit taking in Volkswagen. BMW is holding up quite well, actually. It's actually flat over the last week. If we look at the BMW chart, actually, And I think what we've seen in this sector, the autos and parts sector, is just profit taking going into the summer. I think this is an opportunity to get long. So BMW's numbers were amazing in April. They've gone up ever since, and now we're seeing some profit taking going into the summer. But look at that for a reverse head and shoulders. I mean, basically, BMW just looks like the DAX.
Yeah.
But you know, you're getting long the luxury end car makers, yeah. So you're basically buying the 5 and 7 years. That's what you're buying when you buy BMW. And Volkswagen, again, fairly similar looking chart. So you've got a big spike up there in April on autos. Yeah. And we've got a bull flag coming back in, a bit of profit on a bull flag there. I think this is an opportunity to get long BMW and Volkswagen going into the summer. And if you want to see classic profit taking, a bit of Pirelli. Look at that stock. It's gone from 5.5 to 7 in a month and a half. So Pirelli in Milan, 5.5 to 7 in a month and a half, and you just see some profit taking coming in. But the wins in the sales for this sector, definitely. So I think we should be looking at long BMW into weakness, long VW into weakness, long Pirelli. Industrial metals down 2.8. So we've seen a little short squeeze in the second line names. So the ones that we talked about last week. I was expecting a bit of a short squeeze in copper. CAS, Antofagasta, Vedanta, Eurasian Natural Resources. They've all squeezed a little bit off their lows. They're looking very, very oversold technically. But the reason why the sector's down is really because of Billiton and Rio. So the heavyweights in the sector have come second. The selling seems to have come second. So maybe there's people putting on or taking off those spreads. Where you basically see, because usually what happens is when sectors come off, usually the heavyweights come off first. Because when hedge funds or pension funds are looking to just move into cash, they look for the most liquid names to get the cash first, and then they go for the second line names. What we've seen in this sector is the second line names get hit really hard, and then the first line names. So that to me says people have actually had the spreads on, where they've actually been long the second line names and short the top line names. They've capitulated on the second line names, and now they bought back the first line names, which is why second line names got hurt and first line names were okay. And then this performance is reversed. So you can see what trades people have on in the market just by that move. So on the watch list, keep these second line names on the watch list. Short CAS, Anton, Vedanta, ENRC into a rally. Okay, chemicals down 1.41. Construction materials down 1. Life insurance down 1.46. Non-life down 0.5%. General industrials down 1.5%. Industrial commercial services down 1.34. Media flat. Personal goods roughly flat, small down. Real estate up 1.8%. So we saw the real estate sector. British Land, Landsec, all of these guys. Yeah. General retailers up 90 basis points. Tech hardware down 1. Tech software down 1.29. Travel and leisure down 1.5, despite the decrease in the oil price.
Continually weak sector.
Continually weak sector. Why?
Weak consumer.
Thomas Cook on the 9th had quite a strong profit warning in the UK. Anyone see that? Thomas Cook's dragging the sector down. So actually the airlines within the travel and leisure sector have been squeezing a little bit. The holiday companies, Thomas Cook, destroyed. It's holding the sector down. So it's down 9% since the 9th of May. And all the analyst downgrades are coming into the stock now. Now it is technically oversold as well, but it's clearly a short. So I think we have to stick Thomas Cook and TUI on the short list, on the watch list.
Yeah.
So I think we've got to have on the watch list for shorts, CAS, Antofagasta, Vedanta, and Eurasian Natural Resources, Thomas Cook and TUI. So we're looking to short those into rallies, okay? And summarise on the long side, long BMW, long VW, long Pirelli, okay? Defensives, John?